Sinking in 3, 2, 1, go. SOFI Technologies offers banking, lending, and investing services, and my price projection goes out to December 2026. I put their EPS as 53 cents, which is a 43% increase. I dropped their PE to 35 because it's a little high, and that would make their price $18.55, which is a 26% upside. The analyst 1 year is 1464, which is a 0.2% decline. Their debt to equity is currently 49%. But despite their lowered guidance on their last earnings call recently, their customer base is continuing to grow. I believe they have over 10 million customers now. So that's a great sign of internal metric growth. And their revenue is also forecasted to grow by around 40% over the next 2 years, which mirrors their EPS growth. And that's really great. Their risk is medium, but and really it's just medium because their valuation's, a little high. These days it's not crazy, but I would put it more towards the lower side of medium. So low, medium for the risk. Reward, though, is definitely medium. I mean, I've seen higher returns for stocks that are just as risky. I do like that their customer base is getting higher, but I really don't think it's quite high return yet. So for that reason, medium risk, medium reward, I put it buy. For Upstart, they also offer banking, lending, and investing services. This one also goes out to December 2026. They're not profitable, so I used revenue. Their revenue per share is projected to be $10.67, which is a 48% increase over today. They have a really high price to sales ratio of 10 right now, so I dropped that to 9. It could drop a little more, which adds some valuation risk. But that would make their price $96.03 at a price of sales of 9, which is a 34% increase. The analyst 1 year for Upstart is $81.93, which is a 14% upside. And their debt to equity is really, really high at 235. They are adding lots of lending partners, which is a great internal sign of growth. But one point of concern, besides the high debt to equity, is their EPS is expected to be 93 cents per share, it's EPS, by December 2026, which at the current price would mean a PE of 77, which is very, very high, and not really sustainable, especially if that's going to be after a lot of this growth comes through. The downward pressure could be offset by its good revenue forecasts out to 2027, though, and that's really what it's got going for it. Is it does have good revenue forecasts out as far as we can tell. That said, though, I have to put the risk as high just because that debt is really, really crazy. And the valuation risk is high as well at a price to sales of 10. The reward is medium because, a 34% increase for me 2 years out, and plus the analyst 1 year just at 14% just isn't that great. So the reward's on the low to medium side. So for that reason, high risk, low to medium reward, I have to put it as a sell. But moving on to Ally, like the other two, they also offer banking, lending, investing services. This projection also goes out to December 2026. They are not profitable, so I put the revenue per share at $27.83 for that time, which is a 26% upside. Their price to sales, I increased 18% to 2, and that would make their price $55.66, which is a 48% increase between the revenue growth and the valuation growth. And their analyst 1 year forecast is $45.14, which is a 20% increase, and their debt to equity is a little high at 126. They have great revenue forecasted out as far as 2027, and what's interesting, though, in a good way, is they're projected to have an EPS, it's currently negative, but they're projected to have an EPS of $5.47 by December 2026, which is important because if we say that the PE is, let's say, a conservative 25, that would give us a share price of $136.75, which is 265% higher than where it trades today. They also have over 11 million customers, which seems to be growing. So for this one, I put the risk as low just because their debt to equity is a little on the higher side, but it's not crazy. They're definitely just leveraging up. And, their growth really does offset a lot of this risk. If we look at the reward, I put it as high My projection's high. The analysts' projections for 1 year from now is high. And that EPS valuation possibility out to December 2026 just adds so much high reward that I have to put this as a strong buy. That's what I have for you guys today. If you want to see how some of the Magnificent 7 stocks hold up, go check out this video right here.